Tony is standing by in Tillsonburg, Ontario, erstwhile tobacco country. Go ahead, Tony.
David, could I have your comments, please, on Raytheon? Appreciate that, please. Thank you very much.
Thank you.
So, Tony, you guys may know that the defense group and the aerospace group is a sector that we've focused in on for a long time. There's great secular long-term growth in the group. That's not going away. If GDP goes to 2.5 or 2.25, it's going to be there. And we really like the group. The whole group corrected going through the trade discussion, whether it was Raytheon or Boeing or Lockheed Martin. The defense group has turned higher again. So I actually bought some more aerospace this morning in our macro fund. And I think that Raytheon looks just great. As does Boeing, as does Lockheed Martin. Looks like it's making a turn here. So I think that this is a great time to be a buyer.
Gord is standing by in Brampton, Ontario. Go ahead, Gord.
Yes, I'm interested in some of those cash reserves that we heard about over a year ago. And
Apple, okay.
Yeah, Apple, for example. That's my main interest. Okay. And I haven't heard too much, and I'm wondering if they're using them, if there's plans to use them as dividend distributions, or if they're in fact using them to do stock buybacks.
Well, Gord, I think that you can expect them probably to do three different things. Certainly, they've been great at growing their dividend. So, yield is like 1.5, but it's growing very nicely in the teens. So that's the first thing. And by the way, in rising rates, dividend growth is the #1 most important thing. That's what drove the market in the 50s and 60s in the last long-term rate cycle. So that's one good thing. The second thing is they're using it to buy back shares, and absolutely they are buying back shares. I think one of the greatest tells on the market recently is that in the 30 days leading into earnings, the share buybacks stop for the most part because they're blacked out during the earnings period. Corporate buyers are the biggest buyer of shares in the market, bigger than private client, bigger than institutions. Corporate buyers are the biggest, and the market actually has been rising going through this period.
Despite the lack of buybacks.
Despite the lack of buybacks.
Yeah.
So the buybacks come back into the market in the next couple of weeks. That's a great thing for the market. That's another catalyst. But then the third thing is they'll continue to make little tuck-in acquisitions. I don't expect them to give all the cash back. That's that they like to have that big cash hoard. And they'll continue to spend a lot of money on research and development. But great stock, and I think you can own it for a bunch of different reasons.
Dave is standing by in Toronto. Dave, go ahead.
Thank you for taking my call.
Pleasure.
My question is about Teck Resources. So just looking at it, I think it's like there's a lot of positive things going on that investors don't appreciate. Like Fort Hills is going to be a really good thing for Teck Resources. But then on the other side, the flip side is the trade war and the Netherlands stuff. So I just wanted to ask, like, for a long-term hold for a young investor like myself, what do you think of the stock? Do you hold it? Are you a buyer of it at this level? It seems like $30 is the floor for this.
No
Can
problem.
I get
Thanks, Dave.
street consensus?
Oh, okay.
So Dave, this is being driven by the sector right now. The sector has been consolidating since the early part of the year. The basic materials sector should participate in this next leg in the market, and Teck should participate along with it. You can see that it's at the bottom end of a trading range. The longer-term moving averages are moving higher. They do have a great collection of assets. So I don't like to buy something when it's right at the bottom of a trading range, hoping it's going to turn around. I'd like to see it make a turn first. So we really don't have any exposure right now, for instance, to metals. Gold, various base metals, we're just not there because the prices for the basic materials are still pretty weak. But you should see a turn. So if you're a holder and you're comfortable with holding it, kind of while it's been sleeping here, that's fine. I would wait to see it start working its way higher. In U.S. dollars, I'd probably buy the stock north of 26 or 26.5. It's trading right now 24.80. So I'd like to see it $1 or $2 higher in a little bit better tape. But it's a good quality company.
Okay, Jerry is standing by in Toronto. Jerry, go ahead, please.
Good afternoon, gentlemen. David, I'd like your opinion on Celgene. I bought it near the top of its, before it had a sharp drop, and was hoping for a bounce back. So I know technically it hasn't been very good, but what's your opinion of it? Do you hold it? Do you think there's room for a comeback in the stock, or should we just get rid of it and look somewhere else? And what do you think about the sector in general, the biotech?
Okay. So let's start with the sector. If you can put a chart of XBI up on the screen.
Which ETF is that?
XBI. It's the S&P Biotech ETF.
Okay. XBI, okay.
So the biotech ETF is performing really well. Is it one or two names? No. Actually, the number of companies in that group that are performing well has been expanding nicely. And a lot of them are mid and smaller cap biotech stocks. Pharmaceutical companies have been making their hay by buying small, mid-sized biotech companies, tucking in the product and using their distribution engine to sell it. So I would prefer to own a basket of smaller biotech companies than the very biggest ones. So if you compare what that looks like to the chart of Celgene, you'll see that Celgene has been a significant underperformer. I don't think you need to buy the laggard in a group. You want to buy the one that's participating in the rally today. And so I would steer clear of Celgene for now.
We're going to be back with David Burrows of Barometer Capital Management. There's a look at Celgene. He's answering your questions on North American large caps, 1-855-326-6266. That number again, if you're listening to us on the radio, 1-855-326-6266.